Good morning, everyone. Thank you all so much for joining us for Prepare Your Spouse to be a Widower. Our firm found that this topic was essential to our 2018 webinar calendar. We help a lot of our clients during tough transitions, such as losing a loved one, and we wanted to provide some strategies to discuss with your spouse now to ensure he or she has the tools and resources to navigate some of these tough decisions when the time comes. For those of you joining us for the first time, my name is Amanda Murray, and I am the Client Service Associate for Stonehearth Capital Management. I have been with Stonehearth for 3 years, and my primary role includes client service, marketing, and compliance. I would like to start off with a few housekeeping items before we get started. On your GoToMeeting taskbar, you should see a section titled Questions. Please feel free to submit your questions throughout the course of the webinar. I will be monitoring all questions and will ask Jamie to answer as many as the time allows at the end of the webinar. If we do run low on time and we are unable to get to your question, Jamie or myself will reach out to you directly after the webinar to make sure we get all of your questions answered. Now I would like to introduce our speaker for today. Jamie Upson is Stonehearth's President and CEO. He has been with Stonehearth since 2000, and in the first couple of years here, he focused mostly on portfolio management, design, strategy, and product analysis. In 2006, Jamie passed the CFP exam, and he spent the next 11 years at Stonehearth co-managing client portfolios and building, analyzing, and monitoring client financial plans. Just this past year, in 2017, Jamie purchased the firm, and he hopes to lead the firm forward and continue to help clients meet their financial goals. Jamie, thank you so much for joining us today.
Thank you, Amanda. Welcome, everyone. I do want to thank Amanda. Not only did she do a great job started kicking us off here, but she also helped put together all these slides, plus the white papers that we post to our website and recording these webinars so that if people want to review them later, they can. So thank you, Amanda. I want to, this is one of those subjects that is not, it's different for every family. I got some families that are very comfortable talking about it between spouses, and I have other families where one or both spouses just prefer not to talk about these line items. So I'm in the camp where I think it needs to be discussed. It will lead to better decision making. It'll result in less stress or reduced stress. It won't eliminate stress for a grieving spouse. There's obviously a lot on their plate, but my goal here is to try to bring to your attention some of those areas that need to be addressed. I think if you're at least exposed to it, it just will feel a little bit less daunting when you're in the moment, because the only thing that somebody's going to want to do is grieve. But unfortunately, there are a slew of decisions that will be presented to him or her when they're settling somebody's estate or dealing with all of the household bills, et cetera, et cetera. So let's kick this off. The areas that we're going to discuss here, essential areas to discuss with your spouse: e-money advisor client portal. For those clients that are on board, you're probably familiar with the word e-money or the client vault. What that is a cloud-based tool. I'm actually going to show you a couple of dynamic slides so that will be live in the database. And there's also certain sections of the software that only clients can access. And in the sample client that I'm utilizing, they don't enable me to be able to present some of these spending tools. So I've actually taken them off of their literature, eMoney's literature, so I can show you what they look like. The next thing I wanted to do, and I've always wanted this, is a checklist for a spouse, the things that they need to address. Now, I'm not trying to identify every little nitty-gritty thing. I presume that most people on this call understand the value of having an advisory team, whether that's a need for an estate attorney, whether that's a need for an accountant, or someone like myself, an investment or a financial advisor. So that financial or that advisory team is going to be there to help answer the nitty-gritties for you. If you're going to do it on your own, you will have to just invest a lot of time and energy and resources to just making sure that you're handling all the nitty-gritties that need to be done. And then sometimes, just as important, things that we suggest you not do in the first 12 months after a spouse passes. So let's first focus on the essential areas to discuss with your spouse. The first and foremost are documents. And what I mean by documents are estate planning documents. Now, traditional estate planning documents include wills and trusts, power of attorneys for healthcare, power of attorneys for finance, and really just something to remember, when somebody passes away, the power of attorneys go away. They're no longer valid. Those power of attorney documents are only valid when somebody is living. But however, the wills and trusts are still valid documents that you will need. Now, in some states, they require the originals or certified copies. In other states, they're happy with copies. I think in Massachusetts, they need the certified copies, but I'm not 100% sure of that. The other documents that you'll need are copies of your deed, or if you have vacation homes, deeds, or potentially investment real estate, all of those that would require a deed, you'll need access to that. The other thing, a lot of vehicles, boats, motorcycles, most of those in most states come with a title. Not all states have titles, but most states do. You'll need access to those. You certainly don't want to lose those. It's not easy if you need to get those fixed and replaced. Finally, access to at least the last year, if not the last couple of years, of tax documents, plus the supporting documents. You know, what did your employer give you, the W-2 or the 1099s, the information that you utilize to put onto your tax return. Tax returns also have Social Security numbers, so sometimes spouses have trouble identifying their spouses or don't remember their spouse's Social Security number. That is an area that you can find that information right on the tax return. The next area that I'll call Show Me the Money from Jerry Maguire, for those that are familiar with the movie. You know, trying to track where assets are can be a very overwhelming feeling for a surviving spouse, especially if that surviving spouse is not the one that handled the finances. They might have held or handled another area of the household, but finances might be something that the decedent handled. Well, that's, you know, it's going to be a challenge, but that spouse, that surviving spouse, has no choice but to focus on the family's finances at that point in time. And I can tell you firsthand, I've been doing this now for 17, 18 years. Every surviving spouse gets through this. Every single one has stepped up to the plate. So it's amazing what we can do when we put our minds to it. And everybody that I've seen has stepped up to the plate to tackle the family's household or finances. As I said, it can be a daunting task. It really depends upon the discussions that you've had, whether you've been involved in the family's finances beforehand, before the decedent passed away. And I also think, you know, being tech savvy, being comfortable going on the computer also has something to do with that, because if you have access to the computer, then you can gain access to a lot of this information just sooner than you can if you're relying upon paper statements and things of that nature. Although you can duplicate that if you guys keep good records and copies of statements. Investment accounts is another category besides bank accounts. And then finally, life insurance. Where is the life insurance? You know, this weekend as I was preparing for this presentation and finalizing my notes and practicing, one of the things that, you know, my wife was nearby and I asked her, hey, do you happen to know where I hold the life insurance policies, or what companies have we purchased life insurance through? And she paused and she said, you know, I'm really not sure. And so as somebody presenting on this subject, I definitely had to look in the mirror and question whether I've done a great job in making sure that my spouse and I have had these conversations. Now, do I think she has the tools to be able to find this stuff? Yes. But the point is, when I ask that question, if she doesn't have a place to go right away, then it probably warrants having a conversation. So what did we do the rest of the weekend? Well, maybe not the entire weekend, but I showed her how to get the information that I'm presenting here so that she knows how to access this right away. She doesn't need to wait for new statements to come in. She doesn't need to even look for an old tax document. She can just go online, and I've showed her where she can now capture this information, and I'm going to show you how you can do the same. The other area, passwords. This is actually something that a lot of people don't think about in advance. This is an area that's always bothered me because we are so dependent on this day and age on resources online. You know, for most of it, I don't personally keep a lot of the statements that companies send. In fact, I ask them not to send me statements. I usually opt for electronic delivery whenever possible. And so that means to gain access to my statements, I'm in some way involved with my computer, whether I'm storing those statements right on that vendor's website, whether I'm downloading them and keeping them stored locally on my computer, or whether I'm using a service like Dropbox, or whether I'm using a service like eMoney, where I can store all of those documents. Passwords are becoming essential. And the challenge with passwords, and for those that might not be familiar, I did do a presentation on identity theft. You can see it on our website if you're interested. And one whole section was dedicated towards passwords, because again, I think it's an area that needs a lot of improvement. I don't remember the time frame of the study, but the #1 password that people utilized was actually the word password. So, you know, we all know that we need to do a better job, myself included, of creating and generating passwords. The key is you're not supposed to be able to remember your password. That's the whole point. If it's easy enough to remember, then it might be something that somebody who does some research on you might be able to find out, like your cat's name or your dog's name, maybe the year of your kid's birth, maybe your own year of birth. You know, it doesn't take a rocket scientist to know that that's what a lot of individuals and families are utilizing to safeguard their information. So, you know, I think we all need to refresh and take another look at our passwords, whether you're keeping them in a little black book or whether you're using a password management solution. You know, over the last 10 years, there's been a huge advancement in apps and tools that are available are at our disposal, especially with cell phones nowadays. This stuff is extremely accessible. That can be a blessing and a curse, obviously, when you're dealing with such confidential information as passwords. But some of the areas that you want to make sure that your spouse knows what the password is, and remember, it needs to be current, which to me sometimes means that it needs to be accessible and easy for you to update and track what these passwords are. So you want to make sure that your bank accounts, first and foremost, investment accounts, credit cards. Don't forget, in this day and age, with how locked in we are with cell phones. Cell phones, most of them, if not all of them, come with a screen lock, so that if you lost your cell phone, people can't get into the phone. Make sure your spouse knows what that password is, or the pattern, or if some phones, my phone does fingerprint identification, so I made sure that it also stores my wife's fingerprint in there. So again, they can get into this, because all too often, many of these sites, in particular bank accounts, investment accounts, they're using two-factor authentication, which just means that if you're logging in for the first time into your bank, they very well may send an email to an email already on file, or your cell phone, they might send a text to your cell phone already on file. And if your spouse can't get into your phone because it's got a screen lock and they don't know how to access that, then they might be shut out of their bank account. Now, I'm not saying that that means that they're going to lose this money. I just think that there's going to be a whole lot of inconvenience that comes along with this. And that's a decision that you and your family will need to make. We're not trying to eliminate all inconveniences, because if you do that, you might have security, might be your new risk. So I think we need to strike a balance here between security and convenience. Emails, access to emails are important. How about the safe deposit box at the bank? The solution that many of our clients utilize is eMoney, which again is the client vault. That has a password. It also has two-factor authentication to be able to get into that software. And you want to make sure that your spouse has access to that. One of the things that I'll mention is, you know, you don't actually need an eMoney. You don't actually need to share your password with your spouse, even though that's still not a bad idea. Each spouse will have their own dedicated login to the same portal, so that you're seeing the same information. So really all you need to do is just remember your own eMoney password. I'm going to show you a couple of password storage tools, or actually I'll reference a couple, but I'm going to show you one of them. There are three really popular ones. The first one is called 1Password. The second one is called LastPass. And the third one is called Dashlane. I use Dashlane. It costs, I think it's about $40 a year. I've actually just researching for this webinar, I actually found that was actually one of the more expensive out of the bunch. The problem is I have all my stuff in there and my wife's already set up, so I'm not eager to switch that. But LastPass is about $12 a month if you want to utilize their premium service. So I'm sorry, I didn't mean $12 a month. It's $12 a year. And Dashlane was $40 a year. So as you can see, these things are not very expensive, and they do provide some great benefits if you're comfortable storing your information online, and I'll show you that in a bit. And finally, contacting your investment advisory, your estate planning attorney, your insurance agent, and your accountant. That is what most people typically consider their advisory team. As many of you know who have joined prior webinars with me, I like to do polls. I think that just adds a little bit of excitement to subjects that may not be the first on your list to attend. But what we're going to do first is, let's see here. I'm going to launch the poll. So as you can see here, it says when the first spouse passes away, how much can pass to the surviving spouse before that's Massachusetts, estate taxes are owed? Go ahead and take a guess, or if you know it, go ahead and select the answer that you think it is. And then when you're done, I'll close the poll. So again, when the first spouse passes, how much can pass to the surviving spouse before estate taxes are going to be owed in Massachusetts? Okay, I'm going to close the poll. We got a good number of votes in. And the results, 100% of you said that it's $1 million. And in fairness, this was sort of a trick question. When the first spouse passes, an infinite amount of money is able to be passed to the surviving spouse. No estate taxes, no matter whether it's $1 billion or $100,000, that can pass to the surviving spouse. Now, why most of you, I'll bet, chose $1 million is when the second spouse passes in Massachusetts, if that second spouse, the surviving spouse's estate exceeds $1 million, then they're subject to mass estate taxes. So I was fortunate in sneaking this one by the group on the line. Because this is something I want to draw people's attention to, the $1 million estate tax. And just know that in New Hampshire, they don't have one. And in Florida, they don't have one. Most states actually don't have an amount that's subject to estate taxes. But Massachusetts happens to be one of those states that is. Okay, let's continue on. Let's meet the Millers. What I'm going to do is I'm going to show you bear with me. Here are the Millers. What we're looking at is eMoney. This is our client portal, and this is what our clients get to log into. And this is also what I spent this weekend reviewing with my wife to make sure that she knows that there's one centralized database that has all of the important information that I think spouses need to converse about and have a discussion while they can. First, you'll notice the individual's names, date of births. It will reference people in their family. It'll reference things that they own. For example, they've got a house. When you look at the house, you can see that there's a mortgage on it. The mortgage is with Institution for Savings, and it's $426,000. You can also see that there's a homeowner's policy through State Farm, and the number is 938, the policy number, and you can see et cetera, et cetera. I think This is super important. I mean, it might seem pretty simple for most, and I would imagine for the spouse, if one spouse happens to lead the financial decisions in the household or lead the management of the finances, then I would imagine that they might know this, but maybe the other spouse does not. And so being able to just identify, oh my goodness, Institution for Savings is the group that has our mortgage. I think that's important. Other things like having the policy number. The first thing they're going to ask you is for the policy number for the homeowner's insurance policy. So let's go over a couple other things. As we discussed, we said accounts are pretty important to know. And what this does is this allows you to list all of the accounts, and as long as there's an electronic access that you can log in to view this account, chances are this portal, this tool, eMoney, can suck in that data with current values on a daily basis, which is pretty impressive. So for example, you can see here that Frank has a long-term care insurance policy. Frank also has a group policy. Many times these group policies are offered by employers, and many times we don't get insurance binders for that. So this was actually one of the things that I wasn't able to show a physical form to my wife on. You know, we have a folder or a bin that's got all of our important documents, estate planning documents, income taxes, and insurance policies. But through your group employer policies, many times they don't issue anything. It's usually something that you just see online or listing in your benefits handbook. So being able to click on that and find out where that's held, I think is important. If we scroll down below, you can find out where the 529 plans are. These are college savings plans. When you click on these things, it goes and it tells you where that asset is held, the Nest plan, and who is in charge of it, and who is the beneficiary, and obviously the dollar amounts. This is all very convenient, good information. Health savings plans, where are the health savings plans? Where are the Roth accounts? And we obviously already talked about mortgages and the information that can be contained in there. So if we go back to the organizer tab, the other thing that they'll list, remember I said your advisory team. What this does is this obviously shows you our firm, Stonehearth, because we're the ones that put this tool together, or we provide it to our clients. We've got David listed as the financial advisor and the contact information. And then we have the insurance agent, their email, their telephone, the attorney, email, telephone, and the accountant, email, and telephone. So I think this also draws your attention. I just recently hired a new accountant. My wife has never met the accountant. And so that was important information for me to be able to show her. Could she get this information in other ways? Yeah, I think so. You know, when we finally get our first year of taxes done, she'll be able to see on the second page of the 1040 who signed that, the accountant signed that. You know, but they're going to have to start searching for that. She would have to know that that's where you find that information. So I think having a centralized database here is important. Now, I'm showing you how to do this online. This doesn't mean that you have to do it in this portal. You can do the same exact thing in some kind of storage bin or safe that you keep at your house or wherever you keep your estate planning documents. Put together a sheet that lists who is your advisory team that you want your spouse to know about, so that he or she can go out and reach out to them to inform them of your passing. Let me see if there was anything else that I wanted to show you here. Incoming expenses, it can show you where, I guess that one's actually a good one. It'll show you what Frank was earning, what Joanna's hospital pension was, what your living expenses, your 401k contributions, your 403b contributions. You know, in reality, many of these things will be triggered when you contact your spouse's employer to let them know that he or she passed away. They will initiate a package that is sent to the surviving spouse that identifies all the decisions that need to be made pertaining to the employer. The final tab that I want to show you is the vault. This is where you can store. Now, again, it depends on the state that you live in. Some allow for copies of estate planning documents. Some groups or some states require the actual certified copy or an original copy of the estate plan. Here you can see Massachusetts last will and testament. So if you just click on this, you can actually pull right up the will. Pretty simple. If there's the tax return that you want to be able to identify, here's a copy of the tax return. Just click on it and it's stored right there. Okay, pretty simple. It's likewise very simple to upload files. You just click right here. So when you're logged into the site, you just click upload, and you can upload whole folders or you can upload files. So it's rather simple tool to utilize. There was one other, the insurance. I don't know if I actually put it, I guess I did put an insurance policy in here. So once again, so now I just gave my spouse access to the insurance, to the estate plan, and to the income taxes right away, no matter really where they are. And again, in this day and age, having access, portable access, is very convenient. And for some people, that's just all they know at this point. Though the only other one that I want to mention is spending, but unfortunately, they don't show you for sample clients the spending tab. So I'm going to go back to the PowerPoint, and I wanted to show you a couple of the pictures of what the spending tab actually provides. Let me zoom in here. So what you see when you're under the spending tab is obviously it's got 3 tabs up here: overview, budgets, and transactions. And you can change the date of how far back you want to look. So what you do is, the first starting point is you sync eMoney with whatever accounts you're trying to pull in the data from. So for spending, you would traditionally bring in your checking account and your credit card account, and it will bring in that data. Each individual transaction brings it in on a daily basis, and the software is dynamic. So if you train it how you want certain things coded, it will remember that going forward. So if you look at a couple of these line items, and I hope that you can see this on your screen, it says IRS here on June 13th, 2014. This was coming from your Fidelity brokerage account, and it was categorized as federal taxes. Here's another one that we've highlighted, Staples Valley Forge. It also came directly from your Fidelity brokerage account, and it's categorized as business. Now, you know, maybe it didn't come in as business, maybe it came in as grocery store, and you need to recategorize, or maybe it didn't know what it was supposed to come in. What happens is you click on it. Oh, I went too far. You click on it, and it gives you a whole bunch of categories within this tab right here. And then you tell the system that I want this to be a rule, so that anytime it sees Staples Valley Forge going forward, I want it to be categorized as business. I started in January of last year, 2017. I went into this software once a week and started tracking this for me and my spouse or our family. And it's amazing how cool it is. It categorizes everything for me. And I'm able to go to screens like this, which will show me the spending overview. And at any given point in time, I can customize the date range. I can say this month, last 6 months, last 3 months, last year. It will show me what I'm spending. Now it also shows income. So if you sync an account that receives your salary, it will also start to track your income. And what it does is it shows you the difference between your income and expenses. And what it will start to discover is whether you have a shortfall or a surplus, or whether you're breaking even. What it also does is it gives you a tool here that says, we'll help you budget. Either you put in a budget, or we'll look at your spending history over the last 6 months and we'll create a budget for you. The software will. And I found that both ways are valid. I actually used the automatic tool that looked at my prior transactions to build a budget for me. And the real value of this, the reason why I brought this up, is because if the surviving spouse is not the one that's been handling the day-to-day household bills, then this is going to be a super powerful tool at their disposal. Now, for a couple of reasons. as I just said, it allows you to go backwards. So when this data is in there, if you've been tracking this for 5 years, there's 5 years worth of data and spending patterns in there that the surviving spouse can go into this. And as long as they have a team like us helping them with this, we can go in there and show them how much they're spending on each one of these categories to highlight if something's going to stand out that's abnormal. The other thing that it does is it helps say that if, let's say that $12,000 a month is your family's budget, then what it does is allows you throughout the month to see, are you on track with that budget? Now, sometimes it's a little thrown off because you know maybe your mortgage is your highest expense, and maybe that starts on the 5th. Maybe that comes out of your bank account on the 5th of each month. Well, then it might, this graph might show that you've overspent because you're not on track over a 30-day period of time. But it's still nice to be able to come in here and see that your budget is $12,000, and you can see whether you're close, whether you're on track for that. I tend to use this screen a lot to just see what am I spending. You know, I always cry when I see how much me and my family spend on food. And you know, it also gives us some discussion points. I can click on this, and then it will go ahead and show me every single transaction that is categorized as food. So I can see, as a surviving spouse, I can see what we were spending money on, and this will also help me get a good sense of what bills I should be paying or expecting in the future. One other thing that this tool has that I didn't actually prepare a slide on is it has alerts. So one of the things that you can do is set up alerts that say, hey, just an FYI, within the next 30 days, you're going to expect a bill for your long-term care insurance policy. I have that set up personally so that it sends me a note, and then usually in a week or two, I see a bill show up in the mail if they send me a physical statement, or they just debit it from my account if it's automatically being paid. So pretty nice tools there. If somebody needs more of a tutorial on their specific eMoney portal, we're always happy to spend the time and to go over this, because I think this is just going to continue to be a valuable tool for a lot of families out there. How do password management tools work? You know, I think this is still not something that's mainstream. I think it's something that is growing. I think it is, to some degree, the millennials have really adopted this pretty quickly, and they're comfortable, or many of them are comfortable utilizing these tools. They are certainly not for everybody, so I'm not encouraging somebody to step outside of their comfort zone, but I do want to just show you what password management tools are and how they work. Now, again, I don't work for LastPass, which is the group that I'm going to show you. This again is one of the tools. In fact, like I said before, I use Dashlane, but this software is about $12 a year. And what's pretty cool about this is I can have it on my device, my phone. I can have it on my iPad. My spouse can have it on her iPhone. And we can also get it on our laptop. So it syncs between all of these data points. And that's actually what they're showing you here on the left-hand side. They're actually showing a smartwatch. I don't have one of those yet. I'm sort of fighting it, but your phone and your tablets, it's nice to be able to say, hey, if I have an Amazon account, then I can click on this and be able to see what my username and what my password is for that site. Most of these tools will also grade how secure my password is. As we just talked about, most people don't have very secure passwords. And so it will either auto-generate a random password for you to utilize, or if you want to type in some numbers and characters, it will grade how secure your password is. Again, the key is that you should not be able to remember this. If you utilize a service like this, then the only thing that you really need to remember is one master password to get into these tools on your tablets. In terms of safety, I can just tell you that everything's encrypted on these. In fact, LastPass, back in 2015, their site was hacked. and the information is stored on their servers. So when I read about that and I read into it, what was stolen was not your Amazon password. And the reason for that is because all of that information is encrypted, and only you with the master password have the ability to decrypt that password. So even though people were able to get into and pierce LastPass's safety measures on their servers, which again, they're not alone. This is not an excuse, but this is the day and age that we live in. Home Depot, Target, you know, these are all firms that have had hackers break through. Because of their security measures, that these sites, and they're all using the same tools of encryption to encrypt that data, so that the only way and key that you find out and can actually read what the password is with the master password, which should be something that only you know. These service providers do not know what it is. Now, I can tell you that my household, between my wife and I, we have 92 passwords. I still can't even believe that, but 92 passwords. And so, you know, it's not something that in this day and age, if you're going to use a lot of services out there, and they're only growing, it's hard to do it alone. Now, if you have the little black book at home, that's good, that's fine. Obviously, that's still prone to fires and somebody breaking in, but it's not accessible. So if I'm sitting at the office and I need to get into my Amazon account, that doesn't do me any good. So having a tool like this has actually been something that I've enjoyed using, and I'm happy that I use it. There are apps for smartphones and tablets. They store all the passwords. So remember what we talked about. We want your spouse to have access to documents, passwords, which give them access to the money, and we want them to have their advisory team. So I've just showed you two sites between eMoney and something like LastPass that if you want to have all of these solved through the cloud and accessible to your surviving spouse, you either need to do this and put this in someplace safe in your home, or in addition to that, you can also have that information online, whatever is more convenient for you. This obviously goes in and talks about all the algorithms. They do two-factor authentication. So again, if you were to go to a friend's computer and you try to get access to this, it would register and say, we don't recognize this computer. Do you really want to do that? And then they would send a PIN to your cell phone as a text, or they would send an email for you to really validate that you do in fact want to access this information on another computer. Again, until the hackers find out another way around this, that seems to be a good solution so far. Let's go back. We're going to now talk about the things. Let me turn this on. I want to highlight, and let me see how we're doing on time. Good. So here's a checklist of the things that require attention after I die. So, you know, the goal here is I just want my spouse to be aware that these are the decisions that he or she is going to need to make. It's not that I'm trying to give he or she an exhaustive list of things. The whole goal is that the first time that they have to make these decisions is not the first time that they've seen that these decisions are going to be made. Again, I think it just helps reduce the overwhelming feeling that they're going to be facing when they're grieving the loss of a loved one. So I'm going to break this down into categories. First is the first 30 days. So obviously you need to contact and make funeral home arrangements. You need to order what I think 10 certified death certificates I think is reasonable. You either get that through the funeral director, or you can go to your local county clerk's office to get that. I think you should always have in mind, does your surviving spouse have access to cash? This is not a big deal if you keep emergency reserves at the bank in a joint account. That's perfect. That's great. But if you each keep individual accounts, or you keep a minimum amount in those bank accounts, then how is your spouse going to get access to cash to pay for the funeral? You want to make sure that these things are accessible. Contacts, people that you want to contact and reach out to. Social Security Administration. As soon as you tell them, they'll stop Social Security payments. If they accidentally make a payment after, or one's already in process, they're just going to pull it back or ask you to pay it back. So I think it's better to contact them right away so that those funds don't come into the household, and so you don't start spending those funds. The good news is Social Security is synced with Medicare, so Medicare will automatically be enrolled. However, with Medicare, you usually have supplemental or Medigap policies, which are additional health insurance providers. So you need to contact them, which is why I've listed them. Now, if I'm a hacker and you just put in the newspaper that your spouse passed away, I know that there's nobody is, or at least that decedent is no longer going to be checking their credit. And if I wanted to steal somebody's credit, somebody that recently passed away, that the credit bureaus have not been notified about, might be a good candidate for somebody that I might try to steal their credit and go out and run up credit card bills under the new credit card. So one of the things that we do suggest early on is contact the 3 credit bureaus, and you need to let them know that your spouse is deceased and that you do not want credit being issued going forward. Veteran Affairs or the Veterans Administration, if applicable, and if your spouse was receiving a pension, you obviously want to contact them as well. Again, this is the first 30 days. 1 to 3 months out, I think it's important that you notify your decedent's employer. Again, that will trigger some things like, are there any pending payrolls, earned time, sick time? What about life insurance benefits that may have been a benefit offered through your employer? And what about medical? What if you're not already on Medicare and you're carrying, and the decedent was carrying health insurance or dental insurance? You need to work through those details with the employer. Now, in most instances, you're going to have access to COBRA. In some instances, the employer might allow you to just continue to stay on the policy. Again, it all depends on the arrangement, the states that you're in, the insurance rules. So you really have to just work with your employer's HR department to find out what benefits and what things you need to address. Schedule a meeting with your advisory team. You know, I'm going to go over a couple of things that you typically address. You call the estate attorney. The estate attorney many times will open an estate for the decedent. They may also need to file an estate tax form or filings at the state level or the federal level. They'll also help you implement the decedent's estate plan. You know, many times, many of our clients have credit shelter trusts or bypass trusts as part of their estate plan, so that when they pass away, things need to be done. New trusts need to be established, new tax identification numbers need to be applied for, and funds need to be put into those new trusts. The other thing that I think is, we handle it for clients when somebody passes away at the asset level or the investment account level, where you need to take a snapshot of what the investment accounts were valued as of his or her date of death. The thing that oftentimes I find gets missed is if that decedent was an owner on the residence or a vacation home, meaning as a joint owner or the sole owner, you really should get the house appraised. Get an appraisal value, because there's rules called step up in basis that will become important. And if you don't do this and then you sell the house 20 years later, you may be missing an opportunity, and the accountant is most likely going to say, all right, if you're selling this house, what did you pay for this house? And he might say, oh, I paid $50,000. And then the accountant should ask, was your spouse ever one of the owners on the house? And if they were, then that will impact, quote unquote, what you paid for the house. We call that step up in cost basis. The other thing, investment advisors, financial advisors, somebody like myself, when we meet with surviving spouses with the family, we look to retitle assets. So he or she may have had an IRA account that has the spouse listed as beneficiary that will help them transition over to the surviving spouse's IRA account. Many times they need to update beneficiaries. This is the surviving spouse that comes and meets with us. He or she may have had their spouse listed as the primary beneficiary. Now, hopefully they have a contingent, maybe the kids listed as secondary beneficiaries, but it's still a good idea to update these documents to list new primary beneficiaries. The other area that I spend a lot of time working on with families that we help is cash flow needs while both spouses are living, and what happens when one of you passes away. Do they have access to cash? What do we expect those cash flow requirements to be? We also need to talk about risk tolerances with the spouse. Maybe they feel like you know, this is now a time when they don't want to be taking as much risk as when there was 2 of them. So I think this is also another good opportune time, 1 to 3 months after somebody's passed away, to be addressing risk tolerance within the surviving spouse's portfolio. Another advisory team member, the insurance agent, contact them. Now, some people call them within the first 30 days. That's okay. You know, it's life insurance, it gets paid out rather quickly. They usually just need a death certificate. And then maybe some information on the surviving spouse so they know who to make the check payable to, although that should be on the beneficiary forms. So you review the decedent's life insurance, but you should also consider updating the surviving spouse's life insurance beneficiaries with the insurance agent. Another player here that needs to be contacted is the accountant. The accountant will need to file a year of death tax return. They may also need to file trust or estate income tax returns. Finally, reviewing household bills that I have highlighted right here. I like how Amanda put this video on here, or maybe these are called GIFs or GIFs or something like that. The household bills, create a list of all the household bills and the due dates, cancel or change accounts to the surviving spouse. These are other things that I think it's okay to do 1 to 3 months in. Collecting all those bills can be a task. I think, you know, there is some benefit if a lot of your bills are set on auto pay. At least they won't get missed. At least they won't be delinquent. You can always address the changing of the account to the surviving spouse's name really at any point, as long as they're being paid, and as long as the surviving spouse is usually on that account, like a joint account or joint mortgage. If there's only one spouse on the mortgage, if that decedent passed away, we had that scenario happen recently, the mortgage company would not talk to the surviving spouse. She was making payments to the mortgage company, but they were not depositing them towards the mortgage. They were actually holding them in an escrow account instead, and not applying those mortgage payments that she was willing and trying to pay. 3 months out, schedule a meeting again with your advisory team. I really think, you know, with financial advisors, that's an ongoing process, but the estate attorney, I think 3 months later, you're probably ready to start redoing your estate plan, updating your wills, your trust if necessary. And I also think that many times, you know, the attorney's office will help, or at least notify you that you should be going to your bank and retitling beneficiary designations to the bank, or the investment accounts. If you're doing the investment advisory side on your own, then you need to address the beneficiary designations on your investment accounts. The other thing that I reference here is retitle bank accounts. I specifically put this out past 3 months because I find that many times, no matter how organized people are, there are inevitably checks that are paid to the decedent's name, and there's no account to deposit them into because the surviving spouse might have already closed his or her account. Maybe it was a joint account, and changed it to just an individual account in the surviving spouse's name. I caution people to just delay doing that, because if you get a check that's made payable to the decedent, you can just go to the bank and write for deposit only and still get it into that joint account. It does become a problem if a check is made payable to the estate of the decedent. If that's the case, then an estate needs to be opened. You usually need an attorney to help you with that. And then open up an estate account at the bank to deposit those checks. Let's see here. Retitle deeds and vehicles. Again, not super urgent. That's just on the to-do list. I've got poll number 2. Let's see what poll number 2 is. We've got life insurance. Okay, be careful on this one. It's a little tricky. Are life insurance proceeds that are paid to a surviving spouse subject to income taxes, estate taxes, or both of those taxes? Go ahead and enter your answer. This is one of the more popular misconceptions when it comes to life insurance proceeds. Okay, we're still getting some votes that are coming in. Good. So nobody fell for the trap on this one. So here are the results. Oh, I gotta show results. So 67, you said both. That's not correct. The correct answer is estate taxes only. So you know, at least nobody said income taxes only. When life insurance proceeds are paid out, they're income tax free. So you don't have to pay taxes because you received it. However, the value of that life insurance payout, the death benefit, if it's $1 million policy, that $1 million is included in the value of that decedent's estate and may or may not be subject to estate taxes. Okay, let's hide the results on that. And let's pull up the presentation here. Okay, so I promised that I would say some things that you should not do in the next 12 months. And the first on that list is don't pay off the mortgage. All too often people are anxious, especially if they get a life insurance payout. You know, there's a couple $100,000 or $1 million plus that comes in, and they're staring at a $300,000 mortgage. What I caution people is don't pay it off yet. Let's take the time to go over your cash flow and your bills and expenses to make sure that we have a good understanding of what assets you need to cover the cash flow requirements. When you pay off the mortgage, it's a lot harder if later on we determine that you really need a mortgage or you would have been better served by a mortgage. It's harder to obtain that mortgage later on in life. The other thing, don't sell the house right away. Take some time to digest things. And I know that for a lot of families or a lot of surviving spouses, it may not be easy for them to stay in that house. You know, that's where they have a lot of these fond memories of their loved one and their best friend. I mean, I get it. I understand that that's not easy. I've just seen too often where people have sold the house and they've said in hindsight, man, I wish I hadn't had that knee-jerk reaction. I wish I had taken some more time. So just learn from that. Learn from some of the experience that other people have gone through something similar have suggested. The other thing is don't move in with the kids yet. If you are thinking of moving in with the kids, go ahead and stay with them for a week, a month, 3 months. Do not sell your house. Give it a trial. Make sure that that's something that you and your kids like. It is not for everyone. We got that, so that completes this presentation here. What we have listed here are a list of the upcoming webinars. The next webinar that we're hosting is going to be on March 28th at noon. This has been our most popular webinar. I'll be holding that again this year. Are your family's assets protected by a nursing home? And on April 26th at 10 a.m., Chris is going to be doing his Chief Investment Officer's Corner. I think with all the volatility, I think we're going to see, it depends on whether the volatility continues, which there's really no sign that the volatility is going to slow down anytime soon. It seems like volatility is going to continue to increase. I think there's going to be a lot of people that want to hear from Chris, and he's again doing that on April 26th at 10 a.m. And then we're going to be doing on May 24th at 10 a.m. strategies to optimize Social Security benefits. And I think David is going to be doing that presentation. Just another reminder, you can always find that information on our website. I will just show that to you quickly. So on our website under resources, this is where Amanda stores all of this stuff. You can find our videos, webinars like what we're doing right now where it's recorded, and then the white papers. And I think Amanda said that, oops, sorry, scrolling too quickly. Prepare your spouse to be a widower or widower. You can download the article right here. So if you want a refresher of the things that we discussed, you can download this paper. I don't know how many, it's 6, looks like it's 6 pages long. And we're going to archive it up there as well as you can see all of the prior white papers that we've written. These are all written in-house by somebody on our staff, either myself, David, Jenna, Chris, Amanda. We all contribute to these articles. What I want to do now is open it up to any questions that have come through. And as a reminder, if you have a question, just go ahead. There's a chat function at the bottom of the control panel that you can submit your question. It'll come directly to Amanda and she'll read it off.
Hi, Jamie. We do have a couple questions. The first one I have is, do you always need to hire an attorney to settle an estate?
Good question. So the answer is technically always no. Most of the time, yes. It really does depend on the scenario. If you typically have sweetheart wills where you just leave everything to each other and you're in a state that doesn't have estate taxes, then yeah, you're usually fine and can usually get away with doing it on your own. Although hopefully you named everything jointly, hopefully everything had beneficiaries, because if you do need to open up an estate, that is a little bit harder to do without an attorney. I find that if people incorporate trusts in their estate plan, especially if it's having to deal with minimizing estate taxes like we have in Massachusetts, I find that you usually do need the help of an attorney. It's hard to do it alone.
The next question we have is, how safe are the password management tools that you reviewed?
Yeah, I mean, I can't say that they're ironclad. I mean, you know, while we haven't seen anybody able to, we've seen them able to penetrate and get into the company's servers, but we haven't seen anybody being able to capture and you know, all of these clients or users' actual passwords, which is really what you're using this service for. So, you know, I'd put it in the category of pretty safe. It's a trade-off, you know, between convenience and security. You know, I can poke holes on both sides. You know, for people that are using the little black book, you know, most people are keeping that right next to their computer or on sticky notes that are on the bottom of their monitor. How safe is that? You know, somebody breaks into your house. Not only do they have those passwords, but you can throw two-factor authentication out the window because they're going to log in right on that computer that has already been approved as a safe computer. You also have, you know, fires, and you know, there is the convenience factor that you lack. I would never be able to get access to those passwords if they were sitting in a black book at home unless I carried that book around with me, which is probably also not a good idea. The cloud-based solutions that I showed you, like last pass, you know, they have encryption. They're behind a master password. They have two-finger authentication, and you can gain access to them you can elect to gain access with a fingerprint. So, you know, that's a step in the right direction. I put a lot of emphasis on the convenience factor, and I do like the fact that they grade how secure my passwords are. And I love the fact that my spouse has access, and I know that the passwords that I'm using are current because I'm in that tool every single day, as well as my spouse. So if Netflix requires that we update the password, either one of us goes in and we update it right then and there if we didn't already use that to generate the password that we're using. I can tell you firsthand, I use the auto generate tool when it's a site that has money or like my credit scores, you know, things like that. But when it comes to Netflix, those are ones that I create the passwords and I store that in these tools.
Jamie, I think in the essence of time, I'm going to cut it off with this last question here. And if anybody has any more questions, we'll obviously get back to you, either myself or Jamie. So please keep entering those questions if you have them. So the last one we have here is, can you comment on step-up rules for surviving spouses?
Yep. So and Congress did keep this. So this was something that was that has been discussed about doing away with it because it does result in a lot of lost income tax revenue for the government, in particular what we call capital gains. So it's usually subject to those assets, or it is subject to those assets that are subject to capital gains. So for example, your primary residence, a vacation home, investment accounts. What this means is that if I own ExxonMobil, and let's say that I bought it 50 years ago and I invested $10,000 and today it's worth $200,000. Now, if I've got such a large profit like that, a lot of people are hesitant and don't want to sell it because they're going to have to realize taxes, capital gains taxes. Well, that's true, and the older you are, the less likely I would even be to encourage you to sell off some of that exposure because of this step up in cost basis rule. So what that means is, if I sell that stock while I'm living, a large amount of taxes are going to be owed. If I die with that asset, then my beneficiary or my spouse, as long as I owned 100% of that stock in my own name, my spouse, after I die, can sell that stock, or my kids can sell that stock. It's worth $200,000. I paid $10,000, and my kids or my spouse could sell that stock and owe zero tax liability, because they call it a step up in cost basis. Cost basis means what did you pay for the security. Step up means what you paid for it jumps up from $10,000 to $200,000, or whatever the stock is worth when I die. This is why getting an appraisal on real estate investment properties, second homes and investment portfolios is super important, because we need to know the value of those assets. Step up is a super beneficial rule, and it's something that we pay a lot of attention to. And for now, it's something that still exists in the rule books. I think, as Amanda mentioned, that's our last question for today. We're at our hour deadline. So I appreciate everybody joining me today. If you have any questions, feel free to reach out to us as always. And I look forward to having you join us for our next webinar. Thanks again for joining us. Take care.